uploaded the presentation materials to our website yesterday. The plan for today is to start with a quick presentation, followed by a 1-hour Q&A session. If you have any questions during the presentations, please use the Q&A chat box and we will later than tomorrow. Thank you once again for being here today. Allow me to start by introducing myself. My name is Andreas Timothy Hadikrisno. I'm the head of Investor Relations at Avia and will be moderating this earnings call today. Joining me on the call from Avia are Mr. Ruslan Tanoko, the Vice President Director of our company, followed by Mr. Robert Tanoko, the Operations and Development Director, and finally Mr. Kurnia Hadi, the Finance Director. In quarter 3, Avian Brands registered a total revenue of $113 million. During the same period, the company recorded a gross margin of 43.5%, an EBITDA margin of 24%, and a net profit margin of 19.7%. By the end of quarter 3, we had 162 distribution centers across the nation, comprising 123 wholly owned DCs and 39 third-party DCs, providing high-quality services to more than 57,000 retail outlets throughout the country. This page showcases the company's quarter 3 2024 performance compared to the same quarter last year. While the inflationary pressures have eased, consumer spending continues to be weak. Economic strains, combined with other societal issues like online gambling and digital lending, have contributed to an increasingly challenging business environment. Avian Brands is actively advancing its sustainable growth strategies, focusing on seizing market share from other competitors. The company expanded its offering by launching 4 new products in this quarter. One of these new products, No Drop Beton and Batu Alam, is certified by Green Label Singapore, reflecting the company's commitment to sustainable product development. Please note that the company is paying close attention to inventory management, carefully monitoring the performance of all existing products to streamline our product line and improve the supply chain efficiency. As of September 2024, we have 123 wholly owned DCs, complemented by 15 mini DCs and 39 third-party DCs spread across Indonesia. Our nationwide distribution network has proven to be an integral part in providing exceptional service quality to customers, fostering strong loyalty towards our company. Our robust logistical infrastructure enables us to facilitate over 13,000 daily deliveries and achieve a 92% success rate for one-day delivery services to retail outlets. We continue to invest in strengthening our delivery capabilities and optimizing supply chains for greater efficiency. Despite the softer economic environment, Avian Brands delivered a positive quarter driven by continued execution of our strategy. In quarter 3, the company reported 1.8 trillion rupiah in consolidated sales, marking an increase of 7.8% year-on-year. For the 9 months, consolidated sales increased by 4.7%, exceeding 5.4 trillion rupiah. Throughout the 9 months of 2024, we recorded transactions from over 56,000 retail outlets, marking an increase of over 1,000 retail outlets compared to the same period last year. I will now turn the call over to Finance Director, Pak Hadi. Please go ahead, Pak.
Thank you, Pak Andreas. and good afternoon, everyone. The chart on the left presents our sales division by segment. The Architectural Solutions segment contributed 79% of total sales, while the Trading Goods contributed 21%. Looking at the sales breakdown by customers, traditional retail outlet generated 92% of total sales, while modern retail outlet accounted for around 8%. Moving on to sales breakdown by distribution network, wholly owned distribution center accounted for 89% of total sales. This allowed the company to maintain its operational and strategic flexibility, enabling us to proactively adjust our course in response to the ever-changing market dynamics. In Q3, consolidated gross profit was reported at 776 billion rupiah, marking an increase of 11.2% compared to the same period last year. The gross margin for the quarter was 43.5%. For the 9 months, consolidated gross profit increased by 5.4% year-on-year, reaching 2.4 trillion rupiah with a 44.5% gross margin. During Q3, the majority of raw material prices remain relatively stable. The company is closely observing key factors that could impact our margin, including raw material prices, fluctuation in the US dollar and IDR exchange rate, and other economic dynamics. In Q3, the company reported a consolidated EBITDA of 427 billion rupiah with a 24% EBITDA margin. For the 9 months, consolidated EBITDA reached over 1.4 trillion rupiah with an EBITDA margin of 26.5%. The reported net profit for Q3 amounted to 352 billion rupiah. The net profit margin for the quarter was 19.7%. For the 9 months, net profit was registered at over 1.1 trillion rupiah with a 21.5% net profit margin. With persistent economic challenges and intensifying competition, the company is maintaining its aggressive marketing initiative in order to boost market share gain. This led to a decline in EBITDA and net profit margin. Please note that the company is taking a cost-conscious approach through careful management of the marketing expenses. By closely monitoring the market trends, we can strategically adjust our approach to ensure efficiency and maximize the impact. In Q3, Avian brand achieved a 12.1% increase in volume compared to the same period last year. The growth was primarily driven by the double-digit growth in the wall segment, followed by high single-digit growth in the wood and metal and waterproofing segments. Over the 9 months, volume increased by 3.7% year-on-year, keeping us on track to achieve our full year 2024 guidance. Avian brand is strongly focused on executing our sustainable growth strategies. We are launching multiple initiatives designed to build strong loyalty among painters. We believe this program, supported by our integrated technology system, will help us grow amidst the pressure market condition and achieve even stronger growth when the market improves. Please be assured that we continue to be aggressive in acquiring market share from other competitors. Throughout the 9 months of 2024, the company recorded transactions from over 51,000 retail outlets, indicating an increase in more than 1,300 retail outlets compared to the same period last year. We have a strong relationship with our customers and will continue to preserve this relationship in the long term. Over the years, the company has remained focused on elevating our service quality to support our customers and deliver even greater value to them. Displayed to the right is an image taken at the company's customer gathering event in August. This gathering are part of the company's ongoing effort to ensure continued engagement with all its customers. The trading goods segment continued to deliver double-digit growth, achieving 18.7% year-on-year growth in Q3, amounting to 432 billion rupiah. For the 9 months, total sales for this segment grew by 17.7% compared to the same period last year, reaching over 1.1 trillion rupiah. The strong performance in trading goods segment can be attributed to the more favorable competitive landscape, allowing Avian brands to achieve higher sales growth. During the first 9 months of this year, the trading goods segment recorded transactions from almost 47,000 retail outlets, representing around 84% of our total consolidated customers. In Q3, the architecture solution segment delivered 660 billion rupiah gross profit, resulting in a 48.8% gross margin for the quarter. During the 9-month period, the gross profit was recorded at 2.1 trillion rupiah, with a 50.8% gross margin. Regarding the trading goods segment, the gross profit for Q3 increased to 116 billion rupiah, with a 26.7% gross margin. Over the 9 months, the gross profit reaching 247 billion rupiah. During the same period, gross margin was recorded at 21.3%. The increase in gross profit for the trading goods segment was driven by strong sales performance. In addition, the company was awarded a performance bonus from the principal for the segment's strong result, which positively impacted the gross profit. The bonus for the first 9 months was recognized in Q3, thereby contributing to the significant rise in gross profit for the quarter. I will now pass to Pak Robert to continue the presentation.
Thank you, Pak Adi, and good afternoon, everyone. This page showcases the company's well-managed cost structure for the 9-month period of 2024. The increase in sales and marketing expenses is driven by the company's intensified marketing efforts. Raw material prices show a relative stable trend throughout the year. Additionally, the company is ramping up its promotional activities, contributing to the increase in BTL marketing expenses. Our fiscal position remains strong, underpinned by healthy cash flow and disciplined working capital management. The company maintained a stable working capital during the 9-month period, hovering around 30% of total sales. Total capital expenditure for the period was 4.5%. Routine CapEx accounted for around 3% and around 1% was allocated for the construction of the company's third factory. Avian Brands has a strong free cash flow, accounting for around 16% of the total sales. The company continues to uphold its commitment to distributing a minimum of 50% dividend payout ratio. At the same time, we are keeping a close eye on the merger and acquisition opportunities. The chart on the far right illustrates the company's consistent on-time collection of account receivable. Despite a difficult economic environment, the company was able to maintain over 90% on-time collection of account receivable. Retail outlets continue to prioritize Avian Brands in terms of payment. In December 2023, the company launched a share buyback initiative, allowing for the repurchase of up to 1.4 billion shares with a maximum allocated fund of 1 trillion rupiah. Until September 2024, the company has acquired around 53% of the maximum shares, utilizing around 40% of the total allocated fund. The remaining authorization stands at around 667 million shares, with an available budget of around 602 billion rupiah. The company remains committed to executing the share buyback program in alignment with its strategic objectives. We believe we are on track to meet the lower end of our full year 2024 guidance by prioritizing the execution of our sustainable growth strategies. We are well positioned to navigate the current market pressures and continue to drive market share gain. The company is taking a proactive approach to ensure we remain competitive and agile in the ever-changing business environment. That concludes our Q3 2024 presentations. Thank you very much for joining today's earnings calls. I will now pass to Pak Andreas to moderate the Q&A session.
Thank you, Pak Robert. We can now proceed with the Q&A session, which will last about 1 hour. So the first question is coming from Divya. Number 1, how is the volume growth in October? Is it as strong as 12% growth in third quarter? Number 2, why is sales value growth of 5% slower than volume growth? Is there a down trading, or is it change in category mix? Which categories are growing faster? Number 3, why are margins for architectural solutions lower despite stable raw material costs? What's the margin outlook for the fourth quarter? And number 4, higher advertising spends in third quarter. Can you comment on where competition is more aggressive, and how much do we expect to spend on A&P in the next 2 quarters?
All right. Good afternoon, everyone. Thank you for your question, Divya. So if we look at the performance in October, I think it's a bit too early, right? So we just concluded the month of October. But look, to be honest, the market has not been easy, right? We have been really focusing and spending all power in trying to continue to navigate and continue with our market share gain. So I think it's a bit early to comment on the October performances because we're still keeping an eye on it. I'd like to answer your second question. Why is sales volume growth 5% slower than volume growth? Value growth 5% slower than volume growth. Is there down trading, or is it a change in category mix? Which categories is growing faster? Yes. So you're correct in the second one, in the sense that there is a change in the category mix. So the fastest growing in this segment is the wall paint category. Maybe Hadi wants to add something on this. You're on mute, Hadi. Hadi, you're on mute.
Yeah, sorry, Pak Rosa. Thank you. Okay. As we can see, the volume growth in Q3 was higher compared to value growth. Yeah. Therefore, the blended ASP is look like a decrease. Yeah. Actually, this is primarily due to the stronger sales performance in the wall segment. In Q3, the wall segment achieved a double-digit growth, volume growth, the highest among all segments. Meanwhile, waterproofing and wood and metal, which are the other top sales contributor, only deliver a high single-digit volume growth. And as you might aware, the average selling price per liter in the wall segment are much lower compared to other segments like waterproofing or wood and metal. As a result, even though the volume recorded double-digit growth in Q3, the value growth is relatively lower. So this is contribute to the gap between volume and value growth in Q3. Hope this is answer your question, Divya.
Maybe you can continue to question number 3, Hadi.
Yeah. Why are margin for architectural lower despite stable raw material costs? What the margin outlook for Q4? Okay. If you remember, in our COGS, in our COGS, particularly in architecture solution, we include the below the line expenses. Yeah, for the Q3 and in 2024, the below the line expenses is a bit higher compared to previous period. That's why the margin is a bit low compared to the previous period. Yeah. And for Q4, I think we aim to get a same level of gross margin with the Q3. Thank you.
On the last one, higher advertising spend. Maybe you want to comment on that too, Hadi.
Yeah, I think on the advertising spend, in we want to keep because we want to keep our aggressiveness in marketing. I think we will also maintain the marketing expense at the same level with Q3.
Yeah, so just to add on that, and this is important for us to continue to do because we are responding to what our competitors are doing in the ground, right? And as you may know, the competitiveness dynamics within the paint industry has been quite intense in the past 2-3 years. And therefore, if we don't retaliate to what our any particular DC is doing, if Greater Jakarta, for instance, is one area, then we do everything in Greater Jakarta. But in outer islands, let's say in the island of Ambon, if we only need to do something in the island of Ambon, then we don't need to do on the other islands adjacent to Ambon, for instance. So that's basically one of the ways that we're trying to do in trying to be more conscious and trying to do it to be as efficient as possible.
We go to the next question coming from Yuan Long. Good to see you, the team. Few questions from me. Number one, architectural solution segment was growing 5% year on year on this quarter. If I do simple volume slash price decomposition, seems like volume was growing 12%, implying that pricing ESP per metric ton was about minus 7%. Is this the case you see in the quarter? Higher mix of lower ESP products. Number two, trading goods, massive margin improvement here. What is going on? How sustainable is this? Number three, guidance for full year is still at 6 to 10% for value growth in sales. I think we are tracking at 5% year on year for 9 months of this year. How's the confidence level in the fourth quarter? Anything we can share for October trends?
Yeah, I think question one was already answered earlier, Yuan Long. So let me just reiterate what Hadi said. So essentially, if you recall, out of the 3 main revenue contributors within our company, wall, wood and metal, and waterproofing, the price per liter in the wall category is definitely the lowest among the 3. And as wall paints growth is way higher than the other 2 segments, then obviously our ASP is impacted. On the second point, the trading goods, yes. So if you look at the massive margin improvement, we mentioned earlier that it was because of a one-off bonus that was given to us. So the bonus that was given to us was actually for our 9-month performance, but it wasn't given on a quarterly basis. It was given to us on a Q3, which is why you saw a spike. And in Q3, it jumped up from 17.4 to 26.7. In terms of how sustainable this is, well, it will be higher than what we saw 9-month last year, right? If you look at the 9-month last year, it was 17.8. But then 9-month this year, it's at 21. Well, for the full year, it should be maybe around 19% or so. I think that's what we're looking at, because then things would have normalized in terms of trading goods. Number 3, the guidance for the full year in terms of value growth. Yes. So again, we basically did a lot of things right in the Q3. And I think what we'll do is again, learning from what we have done right in Q3 and trying to duplicate them again in Q4. All the different areas have different competitiveness dynamics, and that's what we analyze, and that's what we do in terms of our actions. We don't just do one thing for the whole nation. So in each areas, while we may have one or two common competitors almost everywhere, but there are a few local competitors or a few regional competitors that we can act differently, and that's what we've been doing in Q3. So I think we'll continue that trend among other initiatives that we've been doing and try to hit our target. Overall, we're feeling quite confident.
Is there any other questions?
I think while you guys are typing up some of the questions, maybe I can add something with regards to the new administration, right? There's been a lot of news with regards to the addition of the 3 million housing that President Prabowo has been mentioning. And so what we're doing as a company is continue with our active approach to the various government entities. And now the ministry is split into 48, if I'm not mistaken. So there's a lot more work that needs to be done. But hopefully now we can just meet the particular minister which is related to the housing, right? I think it's a lot more focused is what Prabowo is trying to do for Indonesia. So the work that we're doing for that particular department is continuing. We invite many of them to come to our facilities to visit our R&D center and everything else. And at the same time, we continue to hire people with expertise specifically in projects. So we've been getting a few people from our competitors that has joined us. Maybe we have like 1 or 2 in July or August, and then we have like 2 more under consideration now. But all these people that we're adding basically had experiences in the project segment from our competitors. And, so what we're doing now is bulking our project segments by adding a few people with expertise that would allow us to speed up our, path into having more sales coming from project, because we definitely want to participate when the 3 million housing is going to be realized. Any other questions that you have for us?
So far, not yet. Oh, there's a question from Calvin. Any plans to increase buyback program as the current valuation should be more value accretive compared to acquiring competitors at premium valuation?
Yeah, I think we will continue with the buyback as we planned before. Yeah, so we still have time until June next year. So yeah, we try to stick on the plan as initial.
You want to answer the next one, Hadi?
Yeah.
Next from Tian. Robert just said company is confident meeting the low end of the guidance range. Is it a slight tone down on EBITDA margin and gross margin guidance? Do you have any update?
Yeah, I think on the margin, I will answer on the margin. I think the decline in the EBITDA and net profit margin in Q3 is attributable to the company's intensified marketing effort in response to the more aggressive competition. So we have anticipated the increase in the marketing activities within the paint industry at the beginning of the year after the net profit margin reached a record high level last year. Our target for EBITDA and net profit margin is around 26% and 21% respectively, which represent our comfort range. For the first 9 months of 2024, we maintain an EBITDA margin of 26.5 and net profit margin of 21.5%, but still aligning with our established range. So yeah, we continue to carefully manage our operating expense to sustain our target margin to the end of 2024. And also please note that the company is closely monitoring key factors that could impact our margin, including the raw material prices, fluctuation in the US dollar and IDR exchange rates, and other factors.
And next question coming from Andre Siantoro. Why use higher A&P instead of discount to gain market share?
Adi, you want to? I think it has something to do with the way the numbers are being allocated, right, for the A&P, and some are below the line, the audit.
Yeah, I think some of the instead of discount. Yeah, I think discount is not always work when we want to gain market share, because again, the price sometimes the customer consider that the price is equivalent with the quality of the paint. If we just say the same paint, the same quality with but the price is much lower, I think the customer is think differently. That's why yeah, we are not using discount to gain market share.
Yeah, maybe I can just add to that, right? So I think as a company, we've always been known as being somewhat creative. If we look back maybe 15, 18 years ago, we were the first company to use the gold coin as really a way to incentivize our customers. Because previously, our customers was given a lot of different things like T-shirt, and electronic products, handphone, and you name it, right? Sooner or later, they became bored because you only need one of each, pretty much, right? You only need one phone. You probably need another motorcycle. But you don't need so many, because we have to keep coming up with all the different things that customers may or may not have. So at the end of the day, maybe 15 or so years ago, we decided to use gold coins, right? Nobody, after all, minds if they have more and more or accumulate more and more gold coins. And that's basically what we've been doing for the past 15 plus years. And the use of discount is something that we tend to avoid. And the reason for that is, let's assume that we have a product which is priced at $10, right? The moment I sell it with a 10% discount, then the cost for all shops will be at $9, right? So it's only a matter of time before somebody will bring the price down from 10 all the way to maybe 9.1, where they only make like a $0.1 profit. In contrast, if I maintain the price at $10, but I give them a voucher or a gold coin to the amount of that $1, the way the mindset of the consumers think is that, well, hey, my cost is still at $10, right? That $1 of gold coins or voucher or whatever, I basically put in my pocket. So not many will end up discounting it so that from 10 will go down to 9. I hope I'm making myself a bit clear with regards to why are we not giving discount other than, all the different products or some of the other things that we're doing. Yeah. Next question, Andreas.
Next question from Selviana. Can you talk about the potential ESP from the housing project? Should we expect lower margin from the housing project segment to the extent that you see a lot more sales from the project division?
At this point in time, Selfie, the contribution from our project is still very, very small, right? When we look at a few other leading companies in Asia, we look at the project contributions within their revenue stream, we saw that their numbers are hovering between 8 to 12%. We're still in the low single digit, to put it into context. So there's a lot of work that we still need to do. Your question with regards to should we expect lower margin from the housing project segment? Well, to be honest, if you recall, we have products from premium all the way to the economical, right? And in terms of gross margin, right, even the lowest tier, like let's say in category 1, our gross profit for these products are still pretty good. Okay, let's not compare to the category 5. If we compare category 1 to say category 2 or 3, the gross margin profile is only different between 3 to maybe 6%. So it's not really that much. So ultimately, it depends on what kind of specification does these housing projects that the government basically wants to launch require. If they require the cheapest products that we have, let's say in category 1, which is called Aries, then that's what we will supply. But we are always careful when it comes to the account receivable collection, Selfie. Rather than focusing on just on the size of the project, we really are concerned about whether we can collect the money or not, because sometimes that happens, right? People continue to be aggressive, and then in the end, the payment terms ended up being sacrificed. So that's what we're basically carefully considering.
Next question from Danif. Strategy going forward if market or macro conditions remain unsupportive?
Yeah. So when we think about we mentioned the word sustainable market strategy, right? So the question that we have in the back of our minds is that, look, the market for the building materials in Indonesia has not been great in the past 2-3 years, right? But we can't keep just making up excuses and then to basically say, well, the market is not doing well, then maybe we should not do well, just wait for the market to recover. That's really not the way we look at things, right? Even when the market is not supportive, we always see like, okay, what can we do? So there's a few things that we do, right? Number one is the innovation side, which is why you continue to see us as a company launching more and more products, right? So if we did not launch anything in second quarter, but you saw that we've launched 4 products in Q3. Well, today, as it happens, we launched 1 more product. So, so you'll see that the innovation side in terms of launching new products will continue coming from the company. So even when the market is not supportive, we'll continue to do our work. Now, beyond that, there are also a few other things that we're trying to do to really continue to gain market share. One of which is that, look, we understand that it is much easier to really get market share from smaller players. And that's basically what we've been focusing to do. And I think that's basically what led to our positive growth in Q3. We were targeting the smaller players. We were targeting what they're not doing, which is they're not aggressive at all. They just basically take the approach of wait and see when the market is not supportive. So we really target them. We attack them in all the various locations in Indonesia. And I think that was one of the key success factor that led to a positive growth in Q3. So likewise, going forward, we'll continue to do that. We'll monitor where they are weak, in which area, in which segment, and we will hit them hard in those areas. After all, we can always do cross subsidy, right? For some of the products in one area or 2 areas, if we have to give, let's say, a 10% discount, 10% promotion, 20%, I mean, we can afford to do that because that particular one particular or 2 DCs only has a very small contribution, right? If we're not doing this on a nationwide scale, then we're really not worried. So I think that's how we're looking at how we can continue to grow even when the market is not supportive.
Next question coming from Axel Bramantio. Good afternoon, team. Thanks for your insightful presentation. Few questions from me. Number 1, our company plan to be more aggressive on ATL budget to increase brand awareness and brand equity through viral or guerrilla marketing campaign. Number 2, based on my personal research, due to economic slowdown, many retailers, especially Pareto, sitting on high inventory levels right now. What's Avia's strategy plan to help their selling out issues? Number 3, any updates on M&A? Thank you, Pak Ruslan and team.
Yeah, look, we're not going to be extremely aggressive on our above the line budget because we're also taking a conscious cost approach, right? If the market is really not doing great above the line, we don't need to be extremely aggressive. So we're in fact, in Q4, we're looking at how the market is evolving, and then we decide maybe we don't need to spend ATL, just focus on BTL, for instance. But on the second point that you mentioned, it is true that in our view as well, that retailers are sitting on higher inventory levels right now, right? What we found across, the nation is that many are commenting that the traffic going to their shops are definitely lower than what it used to be, right? But people seem positive as we entered the month of September. We saw that some already say that, hey, things are looking quite good in September. But not everybody. I think generally, majority are still feeling that the market is still not very positive. And therefore, when it comes to them, the retailers sitting on higher inventory, that's very true. The question now is, how can we be the company that will get chosen from these retailers so that they're willing to stock more of our products, right? So what we've been doing is to communicate to our retailers that, look, if you look in terms of commitment that we have as a company compared to all the others in Indonesia, right? We're giving you the best service, not only from the speedy delivery, but we're also giving you almost a guarantee on product return. So at the end of the day, if you wanted to buy something from us and you actually decided that, okay, well, I'm just going to try product A and product B. After 6 months or so, if you cannot sell those products, you can always return it to us and we'll exchange it to you via credit, right? So this is one of the things that we basically continue to communicate to our retailers so that they have comfort, so that they understand that, I would prefer to support Avian brands because at the end of the day, right, they will help me to exchange for other products. If I'm trying any new products that I haven't sold before, if I'm trying any new product launch from Avian brands, and if I cannot sell them, they will help me. So I think that's what we want our retailers to really see us in terms of a company that we're extremely responsible, that we have DCs everywhere. So, the commitment to be their longest time partner is always there. That's what we want them to really feel. Updates on M&A. I think the progress is still happening. We continue to engage with a few parties to see how we can invite them to be a part of our ecosystem. But look, let's face it, right? In a country like Indonesia, no M&A has happened in the paint industry forever. If it had been possible, I think one of our main competitors would have already done so, right? Because they have been extremely aggressive in doing M&A in various countries. But the fact is they haven't been able to do anything in Indonesia. So I think the sentimental value attachment to the companies in Indonesia are way higher than in any other countries, in my view. Especially it's mostly family business, right? Family-owned business. So I think M&A will continue to happen. Hopefully we can announce one of the M&A that we are going to do in the next few months. But we're still discussing on the detail on the agreements and everything else. So when time comes, when we are ready, we'll definitely announce this M&A that we have on our hands at this point in time.
Next question coming from Handiman. Number 1, when you decide to enter the project market, especially government's project, how do you see it will impact your AR days and margins? Can it be sustained at the current level? Number 2, how big will it contribute to the overall sales?
Yeah, so as I mentioned earlier, right, when we look at the government projects or any other projects for that matter, right, the main concern is always on the on-time collections or the AR days, as well as margins, right? So the way we do it, when we encounter any projects where we think that where we are uncertain about the AR on-time collections, right? So what we do generally is that we go through a third party who are quite used to supplying to the projects. So we don't supply to the projects directly. We supply to a third party. Obviously, we have to give the margin. We do all the technical support. We go to the ground. We go to the various departments. on the projects alongside with that third parties to try to make the brand awareness, to engage with the developers about the product quality and what kind of assurances that we have and everything else. But at the end of the day, the supply doesn't come from us directly. It would come from that third party. Now, we choose these third parties carefully so that at the end of the day, the AR that we have can still be maintained. With regards to margin, again, Handiman, we are always careful not to actually provide anything where we're not making any profit, right? Because it's really not our intention to continue to gain market share, but we're not profitable. So when it comes to the project aggressiveness, we'll continue to pick and choose those that we think that we should be aggressive. We will. Those that let's say it's a landmark of some kind, right? A landmark in one of these areas, in one of these provinces where we may have to provide the products at a loss. But at the end of the day, we know that we can then use that particular landmark as our advertising, right? So, you may lose money on the project side, but at the same time, you gain something on the advertising side. So these are some of the factors that we can continue to weigh before we decide that, okay, are we going to really sell our products at a loss? And what's the purpose? If there isn't any purpose, no marketing positiveness from that end, then we won't supply. As simple as that. How will project contribute to overall sales? It will still be in the low single digits. But the way we see it, like, give you an example, right? I think in the past 9 months, our project sales grew maybe almost 30% this year, so but again, coming from a very low base, 30% really doesn't mean anything much. So there's still a lot of work to do. And the reason we only grew 30% on the project sales, for instance, is because we're quite careful in choosing the kind of projects that we really want to participate, because otherwise, our AR will not be maintained, and then we'll lose even more on the margin side.
Next question coming from Theodorus Melvin. Hi, Avia Management. Melvin here from Stockbit. Congratulations on the Q3 volume growth. I believe it reflects all of the team's hard work. Few questions from me. Number one, from a paint market perspective, is the volume growth driven by an overall increase in paint demand, a gain in market share from other players, or a combination of both? If you're comfortable sharing, could you indicate which competitors may be experiencing weaker market share? Number two, given the current downtrading trend across consumer companies, could you provide any insight into the sources of value growth? Number three, could you provide any updates on the inorganic growth initiatives mentioned last quarter? Thank you.
Yeah, so the first question, volume growth driven by overall increase in paint demand or a gain in market share from other players? I think majority of our gain in Q3 is coming from other players. So I mentioned earlier, we're trying to process the application from one person or two individuals who's trying to join us from other competitors with past experiences in the project side, right? So, I mean, when we get these people who want to come and join us, we ask them a lot of questions about their current company to see if we can learn anything from them, right? So basically what they shared from us, these are two different people from the same company, but two different cities, okay? So I don't know whether they know each other or not, but they just applied to us within a month of each other. So we asked them same questions everywhere, and we were quite surprised to hear that from this particular company who belong in the top 10 in Indonesia, that sales actually dropped by 20%. I said, that cannot be true, can it? But then we looked around at what they've been trying to do in the country, and I think, okay, that could make sense, right? So this is just from one company where we happen to interview the people who currently work there and who basically want to join us, right? But when we look at many other companies in this others bucket, right, in the 29% on the left-hand side here, I can assure you that many are actually doing far worse. Okay, One example that we can share with you is that we look at the data provided by our sister company who sell plastic packaging, right? So the plastic packaging company that we own, the family own, basically supply to many other smaller competitors, right? So the trend that we notice from there is that almost all of them actually decline in their purchases, right? So I think it's also we can get a conclusion from there that okay, so these are all small companies which are experiencing weaker sales. Otherwise, why would they buy less plastic packaging from our sister company? So I think when we look into the market, we believe that the market share gain from competitors should be the main driver for our Q3 performance. I don't think it's good for us to mention any names, but they basically the first one that dropped more than 20% is in the top 10, and then many more who buy plastic packaging are in the bucket of others. Number two, given the current down trading across consumer companies, can you provide any insight into the sources of value growth? Well, going back to that, trying to get it from our competitors. I think the way we see it, that this should be a way for us to grow sustainably into the future. When the market is not doing well, if we get it from our competitors, right, then we should be able to grow. But on the flip side, when the market is indeed growing, then we'll continue with this approach. Then what we're hoping to do is do that so that we can grow even faster than all of our competitors, right? Not only are we supported by our excellent service quality, by our speedy delivery, our relationship with our customers, but also all the innovation styles that we do, right? So Robert and I discuss this on a monthly basis where we talk about what are some of the products that we need to launch into the market, right? So we've identified a lot of products that would fit our criteria. Majority are in the retail segments, but a few products also belong in the project segments, because there are products which are only suitable for projects, but they're really not suitable for the retail outlets. So we plan for both these sectors so that we can grow in both in the future. And third question, inorganic growth initiatives. Yeah, look, we mentioned that we may be finalizing something, but at the end of the day, this is an extremely slow and tedious process. I get in touch with our consultant almost on a weekly basis to find out what are some of the issues that I personally can help, because I also know the owner. You know, when I'm going to Jakarta, for instance, this is a Jakarta-based company, whether it helps if I meet the owner, the family, and everything else. But we continue to do our work. We continue to discuss on the agreement side so that we can finalize things and finally share with you guys.
Next question coming from Andres Yantoro again. We have seen Chinese producer coming into other industries. Do you see new competitors from the Chinese producers?
Yeah, I think I mentioned this maybe even the first or second quarter, right? We even have the slides here. So when you look at the kind of products that the Chinese competitors coming in to Indonesia, if you look at the three products here showcased on this page, right? What's common in them is that these are products that do not have colors, right? So the product on the very left here, bottom left, is actually a transparent color. The product in the middle is actually a sealant. And the product on the right-hand side is actually a waterproofing tape. So when you think about from that point of view, you know, the kinds of competition coming in from China are not in the paint sector. It's more on these other segments, which are adjacency to paint. But they cannot actually import from China, because when you want to import paint from China, I think the number of SKUs and everything else is really not allowing that to happen. And at the end of the day, paints predominantly consist of water, right? And if you have to import and you have to pay for the shipping costs from China to go into Indonesia, I don't think it'll be worthwhile. But in the future, they may decide to set up factory. Well, even if that's the case, right? I think it's not going to be a condition where we would be easily taken in terms of our market share, because we know the market extremely well. We've been around here for 46 years. Today, Avian Brands is a 46 factory. It's fine. We can always compete with them. So we're not worried from a threat from China.
Okay. Next question from Anutri. Apart from M&A opportunity, any other aspects of the industry consolidation trend do you find most evident? When might that positive effect become more significant to the company performance? Thanks.
I think consolidation in Indonesia will definitely happen. It's unavoidable, like many other countries, right? But the question is, how long will it take for consolidation to happen, right? So what we're trying to do through various initiatives that we have, right? Whether that's loyalty program for the various segments, the painters and so on that I've mentioned previously. These are just some of the things that we continue to do to drive consolidations. I think if you guys come and visit Indonesia and look at the local companies, right? There are more than 200 of them, right? They don't really do anything, right? No innovation, right? And the only way for them to try to gain market share is to try to undercut prices in the market by a big margin, right? And to try to give monopoly to one or two shops in all the different regions, so that the hope is that these shops will be interested because they will be the only one selling this product in that particular area. But look, I think retailers now also believe that, also think a bit long term, right? They worry that if I buy something from a product from a tiny company, what will happen if this company is no longer around, right? There's one company, a multinational company, which is exiting Indonesia soon. So, even then, I think some of our customers who happen to have stock from this company, inventories from this company, are also asking us how we can help them with regards to taking their inventories from brand A, B, C, and then exchange it with our products, right? So I think more and more retailers become aware that buying something from any competitors of ours, if they are small, always comes with a big risk. And that is what happened to the inventory sitting in their warehouses if the principal or the supplier of these products become bankrupt. So a lot of things are in their mind now. And you can see this clearly from the fact that when you go to Indonesia, even if you try to do your business based on consignment, it doesn't work. Because they say, I don't want my shelf space to be taken, to be occupied by products if there is no demand for them, right? Consignments, I'm not interested. I'd rather sell products coming from companies where they are, where we know that they're going to be here long term, where we know that we can really depend on them when it comes to helping us with our inventories, and I think that's how many of the shops are thinking now. It's become increasingly more evident in many areas that they're not really eager to sell anything based on consignments.
Next question from Tian. There's no additional new DC was added in Q3. Does it reflect any rethinking of the expansion strategy for now?
Yes, correct, Tian. So we're actually opening one more in Q4. So and then if we think about next year, we're adding a few DCs in next year, and that's because we already have written commitment. We already signed the contract to have the warehouses built for us. But as the market is really not that conducive, we are rethinking our expansion of DCs. After all, even if we don't expand our DCs, right, none of our competitors can still match our presence in terms of the DCs that we have across the nation, right? You can see here from the right-hand side that we truly are everywhere. You can look at the map that we are present in almost every location. But next year, we'll still be adding a few more DCs. The exact number, I can't remember whether that's 3 or 4, is to be, we will finalize that. But in this year, Q4, we're only opening one more.
Next question from Axel Bramantio again. If the acquisition of a paint company is quite difficult, Is it open to other segments that are in line with Tirta Kencana's distribution channels?
Yeah, very good question, Axel. So the way I see it, right, we always want to leverage what we have, right, in terms of our penetration, in terms of our distribution network. But at the same time, Axel, we're also quite careful, right? The last thing we want is that if we're trying to sell something, okay, that will jeopardize or impact our paint sales in a negative way. So if the paint sales can be maintained, and then we can sell something to make extra profit, then it may be worthwhile for us to consider. That's one. Number two, we do not want to be a distributor of other products. What I mean by that is that if we help some of our other segments, not paint, of course, let's say we help with any tooling manufacturers, right? There's making tools, all these machineries, drill bits, and so on, right? Let's say we help them to sell into the market, right? We also have to think about our exit strategy, right? What will happen to our inventory? Will they agree to buy back everything that we have, right? We have to think about our exit clause as well. Okay, we help them grow the business to whatever it is, right? And so we've done a lot of work. What will happen in the next 5 or 10 years if they decide to terminate the agreement with us? So these are all things that really come to mind, because at the end of the day, right, we don't need to help them to sell the products, right? So if any principles out there which are really in line with our network, right, which is predominantly retail shops at this point in time, want us to sell the products, they must give us a very compelling argument, right? And then we really need to think long term as to why should we help them to do it, right? And then what's in it for us for the long term. Short term is easy, right? We make an extra profit. But for the longer term, we have to be careful, because the last thing we want is for us just to help them, and then we make a small margin, and that's it. After 5 years, 10 years, they just take it away from us, then we basically are left with nothing. So that's not something that we want to do. But at the end of the day, the basic and most fundamental thought process is that we cannot in any way jeopardize our paint sales, because it's just not worth it, right? We make so much profit on the paint side, then we won't let it be jeopardized by other segments. If you think about the existing trading goods that we have now, we're only selling them because the family basically owns these companies, right? And I think on a separate discussion, I've shared with many investors why Avian Brands does not use or acquire these companies. It's because from an EBITDA profile, from margin profile and everything else on these sister companies, it's not worthwhile for Avian to acquire. And then it's better for us just to get the trading goods. But at least from that point of view, there isn't any risk. And you can see here, right, in Q3, we basically were able to negotiate with the company that we also own to that, well, hey, why is Avian deserve to be given all these bonuses? I mean, the performance in the trading goods have been so good this year, so we need to be given something. And that's what we basically negotiated. Hopefully that answers your question. I think we still have like another 15 minutes or 12 minutes. Any other question? Maybe one question that we haven't addressed is from Tian regarding potential M&A. Does it refer to the asset disposal by a foreign paint brand who is exiting Indo? Any more color will be welcome, for example, in terms of products and geo. Well, look, I think I think if you hear from the market, right, there's rumors about this for sure, right? But when it comes to M&A, again, at the end of the day, for us, acquiring assets is not the main way for us to do M&A, right? Because the most valuable when it comes to M&A is the brand, right? And the sales contribution from the brand and everything else. If a company is exiting Indonesia, it means that they must not have done a great job in this country. Maybe they have not been successful. And with that in mind, then obviously the sales that they have in this country may not be appealing to us. Well, if that's the case, then, just acquiring assets, tangible assets, for instance, we can always buy it from our suppliers. We don't need to buy it from them, right? Because maybe the specifications are not the same as to what Robert had in mind. It's not in line with how we planned the third factory in Cirebon is going to be, and so on and so on. But at the end of the day, truly, when we think about M&A, it's about acquiring the brand with the sales that it has contributed in Indonesia. And the most important question is, how fast can we help them grow this particular brand, right? If we acquire the brand and the sales is 100, how many years will it take for us to grow it to 200, 300, and so on? So that's how we think about M&A. I don't think we care too much about acquiring the assets about any companies. In terms of plant and machineries and all that, unless they're selling it for dirt cheap, then maybe we're like, yeah, okay, we'll have a look. If they're dirt cheap, then maybe we'll look at it. Any other questions? Maybe we can conclude the call then, Andreas.
I think if you have any other questions that have not been answered, please feel free to email me. I will coordinate with the management and get back to you as soon as possible. Once again, we appreciate your participation in the Q3 2024 earnings call today, and hope to see you again in the next earnings call. Take care and bye-bye.
Thank you.
Thank you, everyone.